Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the first bullish scenario on the daily time frame, where we're looking for a multi 1-2 and then continuation to the upside. In this scenario, your green 2 is finished, looking for an internal 5-wave impulsive structure to the upside in the blue wave 1, followed by a 3-wave corrective structure in 2 and then continuation to the upside. The official invalidation for this scenario is the low here at 65.5k. However, if we zoom in, there is actually an invalidation at a higher price, which is the 0.618 here at 68.3k, taken from the low of 2 to the current high that we have on the chart. The reason this is an invalidation has to do with wave 4, because inside the blue wave 1 we are looking for an impulse 1, 2, 3, 4, 5. The highest amount of volume in this local trend to the upside was traded at the most recent move to the upside, and therefore you preferably still label this as a wave 3, as most commonly a wave 3 has the highest amount of volume. After a wave 3, we're still looking for a wave 4 and then a wave 5. Invalidation for 4, the 0.618. Now what is important is that this wave 4 is most commonly longer in time than this wave 2. So basically what we're looking for is a decent sideways range with a bit of a solid retracement, as well as the common target area for a wave 4 is the 0.236 to the 0.5, which, as you can see, even with the range here, is not touched. So basically what we're waiting for is a range to form longer in time than your wave 2 and retraces back to at least the 0.236 and maximum the 0.5, with the invalidation being the 0.618 on my chart. After wave 4, we look for one more push to the upside in a wave 5, where we want to see a higher high on a lower amount of volume. Now we do have some resistance to the upside. We're currently trying to flip this resistance into support, and to the upside here we have a blue box 73.1k to 73.6k, just below the all-time high. If I then open all of my levels, you can see what's in there as well. So currently we're trying to flip the point of controls here, but just above us we have a daily naked point of control in the middle, and then we have the blue box where we have a daily and a daily naked point of control. If we then zoom out again to the daily time frame, your second bullish scenario is again a multi 1-2, but in this case it's an unfinished wave 2 here. So instead of a 1-2, 1-2 and a more local 1-2, we now have 1-2, 1 and look for a bigger 3-wave structure in a wave 2. Now your common target for the blue wave 2 is the 0.5 to the 786 Fibonacci, taken from the start to the end of your blue wave 1. The 0.382 is also still a target for a wave 2, little less common though, but has been touched, and the 886 is very rare. Invalidation here is 58.8k. And that means that inside this wave 2, this still has to be part of a corrective structure, and therefore one has to think about a flat A, B, C. 3-wave A, 3-wave B, and then a 5-wave C. It's not the highest probability at the moment based on the local structure here, but at least it's something to be aware of. However, if price hits the 1.618 here on the chart at 72.8k, the probabilities for this scenario will significantly reduce, and that has to do with the 1-hour time frame scenario. So if we go to the 1-hour time frame here, then what you are looking for in that bigger wave 2 is then a 3-wave structure in A, 3-wave structure in a B, and a 5-wave move down in a wave C. Now this move to the upside then has to be counted as a 3-wave structure, which at the moment is not very easy to do. It looks better as an impulse than a 3-waver, but what we can do as a bare minimum is, there it is again, having the 0.618 on the chart, taken from the same pivot, the low over here to the current high. If price would move to the downside now and touches the 0.618, the probabilities indeed are higher. This is a 3-wave structure and therefore higher to move to the downside below 65k. Now what you also see here on my chart are these fibs. The most common target for your wave B is the blue box, the 1.236 to the 1.38 Fibonacci, taken from the start to the end of A, 70.4k, 71k. The 1.618 here at 72k is a level you don't like to see hit for a wave B. It's incredibly rare, and generally when you hit the 1.618 for a wave B, this scenario tends to go in the bin and you're going to be looking for other structures. If we then finally go back to the daily time frame for the third bullish scenario, this one would lead to the biggest retracement, but as you can see in all cases you still look for upside as bullish scenarios have the highest probability. Here you're looking for the diagonal 1, 2, 3, 4 and then a wave of 5. Invalidation for this scenario is 72.9k because your blue wave 5 is not allowed to be longer than your blue wave 3. Now after this wave 5 and therefore your green wave 1, you are looking for preferably a deep short retracement in a wave 2 and then continuation to the upside. Could be quite interesting from a psychology point of view because there's so much hype in the market and this would stop a lot of people out. Preferably you would take out this low here, that would be hilarious, and then you want to see price move towards the upside, grab the liquidity and go. But at the moment locally here there is not yet any great sign of weakness, so we have to be very patient. If we then look at the CVD divergences, all of these CVD divergences have played out as price has been moving towards the upside, and at the moment locally there's nothing going on. We need a bigger range to see some new bullish or bearish CVD divergences. We also have some news today, Tuesday, October 29th at 4 p.m. Central European time, so make sure you trade safe around that hour. And also on Wednesday, Thursday and Friday we have some news, so be mindful of the volatility. If we then look at the probabilities of the different scenarios, then on the daily time frame the highest probability is a multi-1-2 followed closely by the diagonal variation. And when I talk about the multi-1-2, it is the multi-1-2 with a finished wave 2, looking for an impulse to the upside here in a wave 1, as currently on the 1 hour time frame the probabilities are higher that this local move to the upside is an impulse instead of a 3-wave structure. So that would support a multi-1-2 scenario here where this green wave 2 is finished, and also can still support a diagonal, but at the moment this diagonal does look a bit worse compared to the multi-1-2, but we continue to observe, of course. We know the invalidations and we know what to look for. So generally, locally, a price is moving up. The most volume is in the recent move to the upside. Therefore, we're still looking for a bigger wave 4 to form and one more high in a wave 5. Only if price drops and hits the 618 at 68.3k can we consider the move to the upside to be a 3-wave structure, and that would then change probabilities, but at the moment that is not yet relevant and the probabilities are higher to still look for more local upside in a 5-wave structure. I hope that this video was helpful or valuable to you. Please check out the CVD indicator video, the best indicator out there in my opinion, or the Elliott Wave educational playlist to help you understand more about Elliott waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.